Guys, trading is not about how much money you can make. Trading is not about how many wins you can have in a row, but rather trading is about what you do those days when your back is against the wall, those days when it seems like your trades are not going off and everything you do is just going wrong. Trading is about how you adapt to different situations. So in this video, I'm gonna be going over two trading days. Yesterday, where I had two trades, they were both in the red, and I reached the max loss on the day, and my trading today, and show you guys how you can stay profitable in this game for the long run. All right, guys, so the first trade that I am going to go over is on my trade Amazon. So this was from yesterday, and I'm gonna show you guys kind of what I seen for Amazon. And this was, I'm gonna go over this really quick because this trade was kind of pretty simple and straightforward, and it was a very small loss. I think it was 5% overall. So we can see Amazon here. I was watching this 230 level for Amazon. So I was watching this key level at the $230 level, about right here. So we can see post earnings, Amazon dipped down and it started to find demand at this 225, and then it started finding demand at this 230 level. We can see on Wednesday and on Tuesday. And we can see on Wednesday right there. So this is on Thursday. I seen Amazon dip down, and I seen this as potentially a quick liquidity grab for those who were looking for shorts. So I was looking at this 230 level. I seen Amazon poking its head above this level, and I seen it as an opportunity to probably go long, and that Amazon can potentially squeeze back up to that $235 supply level. So I took a long position around this level. Now, when I took this position, I was ready to sell this position if this trade broke down. And what does it mean if this trade broke down? Well, we have this clear area, this 229 level right here, where if we start dipping below this area, then I could say, hey, you know, shorts may actually be in control and this thing wants to go lower. So I took my long position, and this trade was working out for a few minutes, and you can see it started dipping a little bit lower, and I immediately took a loss once we started breaking below that 229 level. And I'm glad that I did, because if you see Amazon in the past couple days, it's just been a little bit weaker. This trade was negative 5%. It was very small, and I had a small position, so not that big of a trade to even speak about. But my second trade, this was on the S&P 500, and this was a trade that if I let emotions get to me, and if I let my bias hold, then I would have lost a lot of money. So if we look at the S&P 500 here, we can see, actually, before I even go over the S&P 500, I want to show you guys ES, because that's what I was watching when I was taking this trade originally. So all right, so you guys can see the S&P 500 had this big dip in pre-market on Thursday, and this was due to inflation numbers. So I seen inflation data come in, and it showed that inflation was rising. So it was hotter than expected, and I seen this as a possible bearish sentiment for the overall market, which it probably should have been. Now we can see here around 930, 935, the S&P 500 is started to retrace, but it started to retrace into this level, which was an old level of demand. So we can see this old level of demand, we started to retrace into this level. If we go back a little bit, I can show you guys this zone that I'm talking about, which is this level right here, the 60-50 level. So I've seen this as, okay, we're weak overall. We had this big red candle, and now we're retracing, and this would be the perfect place to take a short opportunity. So I took my short opportunity there. And if we look at this thing, it continued to go a little bit higher, and we had this big dip right here. Nice dip. I added to my position at this level because I was like, okay, I confirmed that this thing looks like it's weak and is going to continue lower, and my take profit area would be this next demand level at this 60-10 level right here. Now, If we look at ES, we can see this thing immediately reversed and it started to go higher. And once I seen this thing break above this level, so the minute I seen this thing start to break above this level, I immediately took my short position off. So like I said, guys, I took a position right here. I added kind of right here, and I took my stop loss right there because I seen this as a possible area of a reversal. The markets might be wanting to reverse. And even though I have a short bias, and in my head, I see this as a day where the markets should sell off because of that inflation data, we trade the charts, and the charts are telling me that the markets are reversing and they want to go higher. And if I was an emotional trader, and if I was a trader who couldn't accept that loss, then I probably would have continued to hold this position. And if we look what happened, so this is that area that we were talking about. So this is that area we were talking about all the way down here. And you can see markets continue to rally. And not only did they rally, but they went to all-time highs. So I ended up taking a small loss, which is if we look at this thing from where I added, which was kind of right here, it was about 0.5%. So markets moved about 0.5%. But if we compare it to as high as we went, markets went up almost 2%. And I avoided that by accepting the loss and moving on. Now, there was a mistake that I made with this trading, and there was someone in our group who pointed it out, and I'm glad that they did because every day is a learning lesson for us. So if we look at the S&P 500, if we look at SPY on that trading day, so this was right here. Actually, it was on Wednesday, not on Thursday. So it was on Wednesday. But we can see that big red candle right there that we spoke about. And this is where I added to my position once we started to retest that supply level, which was an old demand zone. But I should have probably waited for markets to break this 599 level. So I should have waited for markets to break below this 599 level for that continuation lower. But regardless of the fact, the most important thing is for us to manage our risk. We might have a bias and the markets could be manipulated. We could be in a position where the markets should be dropping because inflation is higher. There are more news about tariffs, but guess what? Markets can do whatever they want, and it's our job to just manage our risk. So that is my trading day on Wednesday. And I came into the trading day today, which is Friday, with the same mindset of I'm going to look for great opportunities and I am going to manage my risk. You don't think about the past at all. All you do is you come as if it's a new day, which it is, and you don't look at past trades and you look at great opportunities. And now we can see SMCI. This is the trade that I took for today. And I was looking at this level. So let me show you guys SMCI really quick. So if we kind of go back, we can see this $43 level is a obvious key level for SMCI. So we have this demand zone down here at $38 and we have this supply level up here at $44. So once I seen us breaking above this level, once I seen SMCI poking its head above this level, I was interested because this is a very strong area of supply. This is a heavily shorted stock. So once it starts breaking above key levels, we know we can potentially see squeezes above this level. And once again, we manage our risk. So for this position right here, I was looking for something like this. I entered at the breakout and I was looking to take profits up here around $50. And my stop loss would have been if we started to break below that supply, that new demand level. And for SMCI, we never broke below that level, but we also did not reach that $50 level. Once I started seeing that this thing was not going much higher, I took my profits around that $47 level. This trade from the top netted me 30%. So it took over completely my two losses from the past couple days. So I lost about $500 in total on Wednesday, and I easily made that up today by making $1,500 on this position. And that is because I managed my risk. And when it came to a trade that was green, I held on for the majority of the move, looking for that higher, the next levels of supply. So guys, quick review: trading is all about managing our risk and about how we react to when trades go against us. We will never be 100% profitable. We will never get every single trade correct. Our ideas will not always be correct. Our bias could be correct, but the markets will do whatever they want. It's our job to not let our emotions dictate our moves, but rather to trade based off of the charts and to know when we are wrong and to accept it, throw down that white flag and say, I'm wrong and I'm gonna look for the next opportunity. So guys, that is all for this video. I hope you guys learned something from this. Once again, if you guys are looking for a community of traders where you can learn and you guys can trade together, I'll leave the link in the description below. I'll see you guys in the next one. Peace. Enjoy your weekend.